Welcome back, everyone. So the big news today is the American government has apparently come to terms on a massive, almost $2 trillion stimulus bill to try to combat the economic problems caused by COVID-19, the coronavirus. Now, details are still being hammered out. They have apparently more or less come to terms, but now it's a matter of putting pen to paper and actually writing the legalized draft of all of this stuff so that they can vote on it. But this is going to be a quick rundown of what the bill is expected to have in it. Now, this is a channel about personal finance, so we're only going to be talking about things that are going to help you pay your bills in the coming months. We're not going to be talking about the corporate side of the bailout, and we're not going to be talking about the political side of it, whether the Republicans or Democrats are right. Is it enough money? Is it not enough money? We're simply going to be talking about how you're going to be able to put food on the table, pay your bills, and move on with life. So first and foremost, the item that's probably going to affect most people is that the overwhelming majority of taxpayers are going to be getting a check in the mail very soon. So it's going to be based on either your 2018 tax returns, or if you have already filed your tax returns for 2019, it will be based on your 2019 tax returns. But each taxpayer is eligible for up to $1,200 of a stimulus check, and that's going to be mailed directly to you. Now, this check is going to be adjusted for income, so anyone who makes over $75,000 a year but under $99,000 a year is going to get a check in the mail, but it is going to be at a reduced rate. And then anyone who makes over $99,000 a year is simply ineligible for this stimulus check. Now, it's important to note that this is going to be adjusted gross income. So it's basically all of your income minus all of your tax deductions that you have at minimum, which is going to include the standard deduction, which is a little over $12,000 for individuals, $24,000 and change if you're married filing jointly. So if you are married, both you and your spouse then could be eligible for a check of up to $1,200 each. In addition, there's going to be a $500 addition for each child under the age of 17. It's estimated that checks could be in the mail as early as April 6th. So that's only 2 weeks away, so relief is on its way. And the next item that's expected to be in the finalized version of this bill is a student loan deferment program. So the Department of Education is basically going to be putting a halt to all student loans up until September 30th of this year. So you're not going to accrue any late fees or penalties. It's not going to hit your credit report. It's not going to be a ding on your credit report if you're not paying your student loans. So you're going to have a handful of months up until September 30th of this year before you have to re-engage and start making those payments on your student loans again. So that's going to give you a big relief for anyone out there that's still got college debt hanging over their heads. So the next thing that's going to be in this bill, and this is one of the items that is sort of the subject to some contention. Lawmakers are fighting over the exact details of this particular item. So some things in this area might change ever so slightly in the finalized product that ends up passing. But currently what is scheduled to happen is they want to drastically expand unemployment benefits temporarily because a lot of people have been basically laid off. Businesses are shutting down, they can't afford to stay open, so they've essentially just fired their entire workforce. And so lawmakers want to make sure that these people are being taken care of properly and are able to pay their bills. So they're looking to temporarily, dramatically increase unemployment benefits. So the first thing that you're going to want to know about unemployment benefits is it varies by state. So some states only offer 12 weeks of unemployment benefits. Some offer all the way up to 28 weeks. But lawmakers are proposing adding up to an additional 13 weeks, so a very significant increase in overall unemployment benefits. Additionally, and this is one of the biggest items that they're fighting over, is they want to extend the amount of current benefits. So once again, benefits vary by state. So some states only pay you $200 a week. Some states pay $550 a week for unemployment. But under the new proposed legislation, they would add $600 on top of whatever the existing amount is. So that would bring it all the way up to $800 a week on the low end, up to $1,150 a week on the high end. And this is sort of a contention because lawmakers are arguing that theoretically some people would then be incentivized not to work because their unemployment benefits would simply be worth more than if they were actually returning to the workforce. But this $600 bonus amount is set to last for the first 4 months. So this is going to be a temporary thing, not a forever change to the unemployment benefits. Additionally, and this is a big change as well, is that it is going to expand the number of people that are eligible to receive this type of unemployment assistance. So it's going to include things like part-time workers or gig economy workers that are typically not eligible for unemployment benefits. So for example, if you are an Uber or a Lyft driver and you haven't been able to drive because no one's leaving their house, you are eligible under this new unemployment system for unemployment benefits. Additionally, there's provisions in there if you are unable to go to work due to the virus. Either you are quarantined and you're not allowed to go, or you had to stay at home because of your child's school and daycare was shut down, so you had to take care of them, or maybe a family member was sick and so you had to take care of them. You couldn't go to work, you had to stay home for that. The verbiage on this stuff seems very, very lenient as far as who qualifies. So chances are that if you have been forced out of the workplace temporarily because of coronavirus, you will be eligible for these unemployment benefits. The next thing up on this list is the provisions have about $450 million earmarked for food banks. So, if you're not able to work, if you don't have any money, chances are you can't buy groceries. So a lot of people are now using food banks for the first time, and that's causing a very significant stress on the supplies for those food banks. So this $450 million is supposed to combat that and allow people access to food banks that are going to need it. And lastly, and this is going to be a big one, is your rent or mortgage payments, because obviously that's where the majority of people's income typically goes, is to pay for their housing. So in order to combat the housing problem, the government has basically issued a 60-day forbearance on any federally backed mortgages if you are having financial trouble due to the coronavirus. So essentially what you could do is put your payments on hold for at least 60 days. I'm assuming you would have to provide some sort of documentation that you were unemployed or had financial problems during this time. You'd have to probably provide that to your lender. So the details of that, I'm not exactly sure, but essentially you wouldn't be charged any interest or late fees or penalties. It wouldn't go against your credit report or anything like that for up to 60 days due to this. And that can be extended 4 different times for 30 days each. So theoretically, if this is a prolonged thing, that doesn't, the economy doesn't come roaring back to life as quickly as we would like, that's going to provide you that temporary relief from, your rent payment or your mortgage payment or anything like that. Also, if you are a renter, under the current provisions, a landlord is not going to be able to evict you solely on the basis of non-payment for a minimum of 120 days. Now, they could still theoretically evict you for other issues. So if you're destroying the property or conducting illegal activity on the premises, they could still evict you for that. But if the only issue is that you're not making your payments to your landlord, they would not be able to evict you for a minimum of 120 days. And don't feel too terribly bad for your landlord because, like I said, they are going to be able to defer their mortgage payments as well, assuming it's a federally backed mortgage during that 60 days and then those 4 individual 30-month periods. since they're not going to be collecting any income. That would be a financial hardship on them, and they would be able to defer those payments. And lastly, while this is sort of a business related issue, it directly affects the majority of you guys. So there's also provisions out there for small and large businesses to keep people on the payroll. So there's a good chance that if you haven't been laid off, that they are going to be able to, send you from home and continue to pay you, and then they would basically be reimbursed via tax credits or grants from the government, so that they can continue to pay you even though they're not necessarily getting any work out of you. So if you haven't been already laid off, chances are relatively decent that your employer is going to be able to continue to pay you during this time, even if you have to stay home. So that's going to wrap up the key details on the personal finance side of this massive $2 trillion spending package. Now, as I said, things are being hammered out still last minute, so some of these items may change ever so slightly, and if they do, I'll be sure to keep you updated on any kind of changes that happen. So be sure to subscribe, leave a comment down below, and I'll see you all again next time. Thanks.